everybody. Hi, I hope everybody's well. You can sit there and I'll...
the screen.
Yeah, I'm going first. So, welcome everybody. Very nice to be here. My name's Jonathan Sharp. I'm a partner with PwC, based in Bangkok, here in Thailand. And I've moved here recently and enjoyed working in the digital banking space. And today we've got Sam Everington, and Sam will introduce himself. So I'm going to kick off the presentation today, and then we're going to have a demo of the Starling digital banking platform, which is one of the world's leading edge and most successful digital banking platforms today. So that's really, really very exciting. But first I wanted to talk to you a little bit about embedded finance. And what do we mean by embedded finance? Well, embedded finance is where financial transactions become part of your everyday life. And by way of an anecdote for me, just recently I had a couple of weeks off back in Sydney, my hometown, and I went skiing for a week. First week I went skiing, second week I worked from home. And through the whole 2 weeks I was there in Australia, I didn't need to get out any cash whatsoever. I looked at my wallet at the end of the 2 weeks and it was empty. All I had in there was, I had my mobile phone app and a couple of credit cards, and I survived for 2 weeks, no cash. And in that time, I went skiing, I bought ski insurance, I bought overpriced hot chocolates and lunches on the ski fields. As you know, they're very expensive. I paid for petrol, and I even had my fence rebuilt in my house in Sydney, which fell over, and I paid for that using my phone as well. So the whole thing cash-free for 2 whole weeks. Once I arrived back in Thailand, it's kind of a bit in between. You know, I'm starting to find cash in my wallet again, unfortunately. But I'm going to try and live without, using cash as much as possible. But that's a very good example of embedded finance. So the fact that I could actually go for 2 whole weeks on holiday, no cash. So what does this mean for banks? Well, for banks, it means that they're at the back end, because all those transactions I executed were through either the ski app for the lodge, they were through my mobile banking app, or they were through third-party applications that were owned by various vendors around the ski resort. So the bank was sitting at the back end of all of that, but really had no influence or operation at the front end of all these transactions. So for banks, that's quite challenging. They've got to shift from being they've got to work out how they're going to differentiate themselves and provide those financial transactions and part of the customer journey, or are they really going to become very good transaction executors? And on the right-hand side here, you see some very good examples of various companies that are very good at providing embedded finance experiences. Probably the best known one everybody talks about is Uber or Grab. And without realizing it, you're actually executing a series of embedded financial transactions every time you get into a Grab. And also for the driver themselves, things like insurance, the money appears in their bank account, all of those things are executed through the app as part of the process. So again, the bank is at the back end, but the app which provides that experience is at the front end. And that's what's known as embedded finance. One of the very important or very interesting statistics is that the value of the embedded finance market is going to exceed $7 trillion by 2030. And I think evidence of this conference is a very good example of the amount of growth in that market. Just about every vendor here today is about payments or new types of customer experiences, new apps, many which of them sit on top of traditional banking services. So we're seeing a huge growth in embedded finance. And again, that's driven by the customer's expectations around how they want to operate and work with their financial transactions and how those financial transactions support their everyday lives. And why is that? Well, because for end users, it's seamless, it's an integrated experience, and there's increased value add when you operate in that mode. So because of the ability to integrate the banking data with the app data, you get a very highly personalized customer experience. You get purchase options available at the right time and place, so it's very easy to buy something and then just transact online. And that's obviously a range of options. And the reason it's been picked up is it's the easiest option. It's that old price, product, place type MBA type stuff you learn. Because it's the right product in the right place, it's easy to transact, and so it's very important that embedded finance and banks are part of that journey. So one of the threats for the banking sector is that embedded financial services disintegrates the value chain. What that essentially means is that the customer interaction is owned at the point of contact of the transaction, not by the bank. So typically the banking sector has a vertically integrated value chain, but today with embedded finance, the bank is at the back end and you have some technology players, then you have some sort of platform like a WhatsApp, a Line, a Grab that actually perform that interaction with the customer. And that's what we mean by disintermediated or a disintegrated value chain. Now, I put up this slide because this is a very interesting move by the big tech players in the market today. So on the left-hand side there you can see Apple, which is launching a very vast range of financial products. They've got Goldman Sachs operating the deposit product on the back end, and Apple can leverage their customer base very easily to sell those products on the market. And Apple are busy launching a very broad range of these products, and they've gone from nothing to 10 billion in deposits within about 6 to 12 months. So, and their providers are all the banks and insurers that actually back-end all those services. But the customer touch point is through Apple. The other very interesting example is X, which is previously Twitter. For Elon Musk, he's really moving the X platform into becoming a financial services provider. So again, it's disintermediating the banks and providing a very broad range of financial services. And for X, it's not a big gap from just doing messaging to payments. And the rumour is that X will be applying for their banking licence. So financial transactions that create financial institutions that create ecosystems around use cases will become dominant as innovation is driven by technology players. So, if you're a financial institution, you really got to think about the additional services that you're going to provide to play in this space to compete with all the various app providers. You need to really, and for financial institutions, they need to become very tech savvy and understand how they can provide those products and services through their applications. And the software is fundamentally breaking down the way this works. So software is at the heart of all of this. And you'll see in the Starling Bank demo what's actually possible in that space. So in terms of technology, innovations in technology are definitely driving digital banking, but most banks' existing systems are unable to cope with this change. And the reason for that is that the existing systems are usually mainframe-based, they're legacy platforms with complicated integration layers to web enable them. And that was all built in the early 2000s. And a lot of that infrastructure is still in place today. And it's not well suited to do high volume, high transaction flows. It's not well suited to handle the transactional integrity you need to work with partner systems. And it can break down very quickly. So banks need to modernise their architectures. A modern API-driven architecture is much more highly scalable, both vertically and horizontally. It's able to bring in all these APIs together in a much thinner layer set of hops than existing banking systems. So that's one of the major technology transitions that banks need to play to move and play in this space. So there's very many embedded financial propositions for retail and banking clients on the market. There's obviously payments, there's buy now, pay later, there's lending type products which are customised around customers' credit capability. There's insurance products. There's very many insurance products appearing on the market today. There's ride insurance, there's screen crack insurance. And these insurance products are interesting because they're very, very high volume and very, very small insurance. So it might only be for the duration of the time you're actually in an Uber or on a ride. So, and that means you get very high volumes of insurance policies that are very small value. But it can be very profitable because a lot of that insurance is even though a small margin, it's very high volumes. There's also in the SME space, I talked about my fencing contractor who replaced my fence. So I just pay him using my app, and that's all handled seamlessly by the bank. No cash needs to change hands. It's very seamless for businesses to get the cash quickly into their account from their customers. So with that, that's really my main presentation. And the thing with embedded finance is becoming part of our lives in everyday way. You don't really realise that you're still transacting with a bank because you're actually undertaking some sort of experience like skiing, for example. So I won't go through the PwC consulting overview, but that's it from me. So I'd like to hand over to Sam now, and Sam will walk through the Starling platform and some of his content. Thanks, Sam.
Thank you. Thanks, Jonathan. Thank you for having me here today. It's wonderful to be here. I'm Sam Everington. I've been with Starling Bank since it was a tiny startup. I joined when there were 20 people or so. It's 7 years now. And since then, we've got a banking license because we didn't have that, and established, launched the bank, built the technology platform that operates it, and really grown into quite a successful UK bank now. So for those who haven't heard of us, we're over 3 million retail customers and 500,000 SME customers, which is where we've been particularly impactful because while the big banks have been competing to an extent to maintain retail and corporate, they've all just left SME as a lovely gap in the middle. And so in 5 years there, we've managed to get to 9% market share in the UK, which has been great. And so we're digital only. We're an app-based bank, kind of launched and built in the cloud, but we've managed to do this without compromising on the customer experience, the service we provide. One of the unusual aspects of the UK market is to promote competition and make people realise there are other banks out there. The government runs an independent survey twice a year. So the Competition and Markets authorities speak to customers of all banks and assess their satisfaction. And then legally, we all have to show it on the homepage of our website and on the wall in every branch where we have branches. So if you walk into a branch of Barclays or NatWest, there's a beautiful graph on the wall that tells you Starling's customers are much happier than Barclays customers. And I really enjoy the existence of that piece of legislation. But it also helps us know we're doing a good job in what we're offering. And for those looking at digital banks and setting up new digital banks today, it's a tough venture. There's a lot of them out in the world. Very few of them are making money. I'm actually probably less worried than most about the kind of disintermediation that might happen because we ultimately have quite a traditional business model. We make money by holding money, by moving it, and by lending it. And whether we control the channel and the customer experience or not, I don't mind, as long as it sits on our license. But Starling's one of its unique bits is it's one of the few profitable digital banks in the world. So last year we turned over 450-something million pounds and made a profit of 195 million. So it's not just breaking even. There's a good margin for the banks in the room. It's like
one of the toughest challenges for digital banks is customer acquisition. And you see a lot of digital banks that partner with third-party other providers to gain access to those customer bases, or you find banks that actually generate unique propositions in the market, such as the business accounts or business banking type function that Starling has to actually create and access that customer base and differentiated experience, basically.
And critically, to confuse the VCs out there, it's not a customer numbers game. For years, we were being beaten up of why don't we have more customers, why aren't our customer numbers high? But banks don't make money onboarding customers who don't do anything. You need people to materially shift their deposits, to shift their day-to-day spending. If it's the kind of digital banking proposition where they top it up to go on holiday or to give a bit of money to their kids, you're going to lose money because the cost of regulation is just too high. So a smaller number of customers that really trust your proposition is what you're looking for. And so I'm going to spend some time on the tech because that's where it's really fun. But the one thing that surprises people about our proposition is we've never actually taken the people away. We don't run chatbots, we don't have IVRs or menus and things. If you pick up the phone or you open a chat to our contact center, you will get routed straight through to a human, 24/7, typically in under a minute. And I think that's one of the really powerful things that's helped Starling get customers to actually switch their deposits because trust is everything in banking, and you've seen high street branches around for your life. You know if something goes wrong, you can go in and see someone. And so in our digital offering, we wanted to make sure you could always get hold of someone knowledgeable very quickly whenever you felt you needed them. Yes, the app's great and everything is self-service. What I mean by digitally native is the app is the primary channel. It can do absolutely everything. We do have a website, hardly anyone uses it, but it can do some of the things, and our contact center can help you as well, but the app is the main way to interact. And so when you're getting in touch, it's because something's gone wrong and you want reassurance, and that's an oddity. And so I mean, all the talk here today is about these new digital licenses, because I know that's what's going on in Thailand, and part of the interest, I guess, in getting us over here as a reference of a digital bank. But it isn't just a problem for traditional banks. As Jonathan said, most banks are layers and layers now of, I've met 60s, 70s, 80s core systems. The more modern banks I speak to are running tech from the 90s. That's doing well, and they're wrapped in layers and layers of complexities and gateways and things, trying to make them look modern, but it fundamentally limits what you can do from a propositional perspective and from an experience perspective, and how you can personalize it. An example I always point to is that the one product I have with a traditional bank in the UK is my mortgage, because Starling don't offer mortgages yet. But if I make a payment into my mortgage, it still takes more than 24 hours for them to add two numbers together and realize my mortgage balance has changed. You're like, how in 2023, when I can do all these other things on my phone, can a bank not add up a loan and adjust its loan balance? And so it doesn't matter how shiny your app is. If your core system doesn't know what's going on, it can't communicate effectively with customers. And so I think that's a lot of what we're seeing now. People are starting to appreciate they've pushed the envelope as far as they can. And we were chatting over lunch that I know a number of the banks in Thailand are now looking seriously at their core systems and core replacement projects. It's a tough sell to sign off. I sit on the executive committee of the bank. I know how they think, and I meet a surprising number. There's a real fintech tour of bank boards and excos coming to see us. And the psychology in signing off a core replacement project is hard, because certainly until recently you were talking 3, 4, 5-year project estimates, big costs. It's longer than the tenure of most executives ultimately. And so why would you sign something off that makes the profits worse for the next few years? You're putting material cash investment in, you take all of the risk, and the upside's all for your successors. And so by and large, the most common thing I think we're seeing is investigating and then kicking the can down the road a little bit further.
I mean, I think we do a lot of work around strategy and architecture, building business cases for core banking replacements, and building the value proposition around that is very challenging. But in many ways, it's a matter of survival for traditional banks to actually modernise, to be able to compete in the world where you have 24/7 scalable, infinitely horizontally scalable platforms, where the bottleneck is not the compute power anymore, it's the amount of data. Things have changed in the architecture world, in the technology world, dramatically in this space, which is enabling all these products and services that customers want. And so the bank has to be able to provide that and match that expectation.
Yeah, and so this talks to some of those things that really matter, that I think are making the difference. And a huge part of this is personalisation. It's not personalising banking products. We're not a big lender, not a big insurer. I know that kind of thing is going on, and some companies will do that very well. But just personalising solutions to solve your problems in your way. So I have a joint account with my wife. I have 2 small children now. The way we manage our household finances is very different to how we managed them 10 years ago, and certainly 15 years ago before I was married. And so my joint account has a bunch of spaces in it. These kind of savings pots are becoming more common in banks as they start to modernise, but the Starling one's really taken that a long way through. So I can move my bills around. When my bills come through, my direct debits come through, I can assign them to different spaces. So when I get paid, my income is immediately split up into some money that's reserved for the household bills, one for the car, one we have for our child's education, and then those bills pay automatically from that. And so it's all in one account, but I've personalised it structurally so that my home screen is the bit that we're actually free to spend, and I know everything else is safe. And if you then link that to modern payment methods, you've got brilliant QR code payment methods and things here. In Britain, we just have cards, but we issue virtual cards against those spaces. So when I'm filling up my car, I've got a virtual card in my mobile wallet that comes straight from our car budget within my space, and I just authorise straight from that. And so it basically runs itself, but that is very different to how other people might run their lives. So our team will have completely different setups this way. And if you're running a business, this kind of thing works beautifully on a business platform to run different shops, different departments, different lines of business, even managing payments by different customers. And critically, all of this is running on real-time, event-based core systems. So when something happens, it happens everywhere, and the customer's informed, the bank's informed, the operations staff know what's going on. You've all got the same message, and it proactively communicates. And we'll try and bring some of that to life. And so, to get to this point, to Jonathan's kind of reference core banking architecture, we were looking at this in 2015, 2016, going, what can we do? And ultimately, this didn't exist as a world, and so Starling is built entirely on its own technology platforms. Everything from the application capture and origination to the core ledgers, the payment and card processing, financial crime systems, even the contact center are running on our own technology platform that lets us run a really efficient operation from a back office perspective, because we have a single interface for everything that's quite easy to use. And it's great for customers because it's all in one place, it works together, they can see their personal, their joint, their business banking, all in one location across a whole bunch of currencies.
And it's a vertically integrated, like it's the whole stack, right?
Yeah.
Yeah.
Yeah, we, as a suppliers, if you look at us as a bank, we have Amazon, AWS as our infrastructure provider. Yeah. And then because of the wonders of European payment schemes, we have some encryption hardware that has to live in a physical data center. Yeah. But otherwise, we're running our own software, all running in the cloud. And so that lets us run a much more reliable service. Probably the stat I'm most proud of, but very hesitant to share, is that in Britain as well, banks have to publish their incidence and outage metrics now as part of this open data that we're moving towards. And a typical British bank is off 10 to 20 times a year as a kind of material incident and outage. And Starling hasn't had a single one in the last 5 years. So this kind of resilient, scalable infrastructure really does work with, well, we've got 3.5 million accounts, but we're running it in test at about 20 million at the moment to know that it'll work. So I think that's enough of me talking. It's more fun to bring it to life. I'm going to do what you're always told never to do and to try and open up live software on stage. Just because it's more enjoyable to use that way. So we'll see how this works. So this is me on a phone. That is the app running. You don't want feature toggles because that's a wonderful world of murkiness. So I'll start a bit with the app, but actually what really interests people is the back office, because quite a lot of banks have shiny front ends, they're quite personalized, but when you get to the back office systems, you're talking a mix of mainframes and Windows desktop applications and stuff switching between 20 different tabs, and that really slows the operations teams down, and far too many things end up as tickets being handed off between different teams as well. And you'll see we bring the same seamless self-service interface from the front end to the back office too. And so I think something like 90% of our contacts are resolved in the first contact in the contact center. There's very little handoff going on, nearly all for financial crime reasons, which is the one thing that needs very specialist skill. And that's what's going on. So it's a banking app. It does the things you expect, but because we're running a bank on it and we care hugely about the efficiency of the experience, it has a whole bunch of different features. So you've got a transaction feed. Yes, you get logos, you get maps, that kind of thing is becoming more ubiquitous. Customers can categorize it and have all kinds of fun with it in their spending. But this screen is not as static as it looks. It's actually pushing a lot of data to you. So when I checked into the hotel last night, they swipe my card for the pre-authorization. We know it's a hotel pre-authorization. You get loads of questions in contact centers about them. And so we can explain what it is. We can explain why the hold is there. We can explain that the hotel should remove it on checkout. And if they don't, you need to talk to the hotel because it can't drop off for 30 days. And the same thing when you touch into transport networks. You get little holes on them. If you fill up at a pay at pump at a gas station in lots of countries, it holds up to a level and reverses later. All of that kind of contextual information is being communicated in boxes that will appear on this screen so that you know what's going on. And that's really powerful. Spending insights, we bring a lot of spending to life to help people understand where they're spending on, both by categories, by merchants. You can see trends over time and see the history of your payments, see how your utility bills are going up, which they are remarkable at in Britain at the moment. And all this same stuff exists on retail and business. So Lisa, the customer I'm logged in as today, has both a personal account and her business account here, and she can just flip between the two and get to the same features, the same insights, the same capabilities within one app. She's only running two currencies, actually in Australian dollars, entertainingly, this account.
I was about to say, that looks like an Australian example. Someone in Sydney went to Yves Saint Laurent.
Yeah, not me, I have to say.
Spent $3,000 on a handbag or something.
But we run lots of currencies as well.
Okay.
And so cards are another area we spent a long time on. Building a card processor is not something I would recommend for anyone. If you're into technology, it is a very, very challenging piece of software to pick up, partly because the card schemes underneath are running some 1980s standards that haven't changed since. But you can do a lot customer experience-wise communicating with them, from really simple things like actually showing your card details in the app. The app knows, for security reasons, it's being recorded here, so it's not. But if I pull out the cable, it would show me. So when I'm shopping online, I can go and get my card details and type them in, because too many merchants don't support mobile wallets yet, without having to go and find my physical card. And we've got quite an extensive set of card controls through, so we as a bank turn magstripe off by default because it's not used in many countries, but it's a nightmare for fraud. So if you go to the US, you'll get told why your transaction declines because magstripe's off, guided straight through to how to turn it on, but we don't necessarily leave everything enabled by default. And then the real fun self-service options, things like, actually there's now buttons in the app to unblock your PIN. If you've got your PIN wrong or your CVV wrong too many times, you need to reset counters. In every other bank I've met, these are all tickets through to back office servicing teams, and because we control the stack, we can surface that kind of card processing functionality right the way through APIs. And then some real oddities. We run quite a different culture. Every other bank I've met manages largely by business case. Most technology decisions are done by the business case, the return you're going to get. And you absolutely have to do that for the big things. Your regulatory business plan, your major investments, there's no choice, and we work with PwC on a number of such projects, so I know those business cases well. But for a lot of the smaller details, if it's a good idea and it helps customers, it's just a good idea. And in a modern stack and APIs, it shouldn't take very long, it shouldn't cost very much. So we empower teams right through the organization to make a lot of decisions autonomously. And so they can just go and build features, go and change things. They see someone having a problem and they do something about it. And so the one that looks odd here is gambling payments sat in the middle, which is one of those things. There were some people that on the team that knew people with gambling addiction problems. They wanted to do something about it. And so we let you opt out of gambling payments in the app, which is nice, but it's not a particularly high level of friction. It'll give you some advice in it, but if I actually opt out of this, it now won't come back on for 48 hours. So I've opted out, and if I try and turn it back on, it's going to ignore me for 48 hours, basically, to help you kind of self-exclude. So if you've got a problem gambling, and you're in one of those moments where you feel the need to, we just won't let you. You can kind of self-exclude from this. There's all kinds of fun oddities going through. And then Spaces is probably my favorite bit of the app. This is the thing I talked about. So it's all in one account, but I've divided up in different ways. This is a business one. If I go back to Lisa's personal account, she's saving for a house deposit. She's rounding up money and putting it aside for a holiday. She's got a space for her bills. But she's also given a card to her child. One of the problems with cashless society, and a lot of British shops went cashless during the pandemic, is children can't spend their pocket money anymore. It's quite hard to go to the local shop and buy something. And so we built a space in the parents' account that solves this, so that the parents set this up. It's money that's ultimately in their name. We don't need to verify the child to any particular level, but we issue a new card connected to that space that the parent has control over. So they can see the child spending, they can top them up and give them money. The parent can control the card, set daily spending limits, that kind of thing. But the child gets their own card to go off spending, and as they get older, they can have an app that, through a complex permission model, can see into this bit of the space.
So does that mean if the child has their own app, they can see that account, and you've got control over that account from you as a parent?
And it's actually the parent's account. They're seeing a subsection of the parent's account.
Okay, that's pretty neat.
In a complex positioning world. And this is one of the things I've loved about putting retail and business together, because they're nearly always separate business units, separate core systems. But actually there's really analogous use cases between them. So this child's card that we operate here is the same thing we do for business expense cards. We brand it differently, you put different spending limits on it, but you can give your employees cards to go shopping, which is a much more common thing. Corporate systems tend to support it. And multi-user permissioning and multi-person payment approvals is another really good example. My grandfather isn't very well, and my dad has legal power over his financial affairs now. And so it can still be an account in my grandfather's name, but my dad has operational control over it and then can approve payments above certain limits and that kind of thing. The kinds of features you traditionally only see in a business and a corporate banking platform. We're finding there's much more use and much more overlap. It's not a case of retail features, business features. It's just a case of branding and positioning. So that's the fun. And then, there's a million different bits bunched away. People like to talk about marketplaces. It's one of the big business experiments that Starling did. That hasn't necessarily worked out the way we thought it would. So a few years ago, I think everyone was telling you kind of marketplaces, connected apps would be the future. There is a marketplace in the Starling app, because when we launched, banks were full-service banks, and we thought by only offering the current account, the transaction account, people wouldn't bank with us. We'd need to have savings and investments and insurance. And And so we offered those from other providers, all kind of richly integrated with self-service sign-up journeys. In reality, consumers have unbundled finance much faster than any of us expected. And so it just wasn't necessary. People were willing to have that product there, that product there, that product there, because they're all apps on their phone. The days of the full-service bank, I think, being necessary aren't there anymore. The one place it really took off is on the business accounts, because you can automate bookkeeping, connections to Xero, your accounting packages, your invoicing, your payroll, that kind of thing. Businesses spend a lot more time on financial admin. I think SME was probably our biggest risk as a product strategy. We thought the retail bank would work. We thought it would work with a younger customer base, and it does. Our typical customer is actually 39, like married with children in full-time employment, which surprises people. And we have a lot of customers in the 60s, 70s, 80s. It's not a younger generational thing in the way I think we would have assumed. And part of that is because banks in Britain are shutting branches like no tomorrow. And older people live in more rural areas, those branches are the first to go. And so actually a well-designed interface that scales up to an iPad that they can go through at their own pace in their own home, it is more convenient than what's out there today. And then business, there was no digital business banking and no fintech was there. But actually, if you think of the shape of most small businesses, they're doing their admin in their vans, on their bikes, sat outside jobs, in the evening, sat on their sofa once their kids are in bed. Something that's self-service and available 24/7 is really all businesses were looking for. Yes, we built a bunch of shiny features, but it's not what attracts them to Starling. It's the simple core proposition developed well that really works and gets people excited. How are we doing for time? So,
very good.
I've never seen Management Portal on a screen this size. This is quite an experience for me. So we have a shiny app. Quite a lot of banks have shiny apps. There's a bit of a fintech tour that goes on around the world. We get banks from all over the place arriving in Britain, often associated with major sporting events. There's been a few in the last week because the Rugby World Cup is on in France. I'm sure that's a coincidence. But they're coming in to work out what Starling has done differently. How has it launched a digital bank and started to make money with it? At first, we thought it's the app features, it's the personalization, it's the real-time rich behaviors and things. But actually what really excites banks when they come and look and get to play around with the technology, because we're quite open with what's there, it's Management Portal, the servicing side. So we have a proper single view of our customer across all their accounts, all their relationships. If they own companies and have beneficial relationships to companies and each other, we can see all that. And we can do everything that's there. But it's not just the first-line contact center. It's all the back office functions too, our payment operations, card disputes, financial crime, onboarding, are all being processed through here.
And is this the front end that you would see if you work in a contact center or whatever, looking after customers?
Yep.
This is what they would use, right?
Yep. So we have about 2,000 people that use this full time.
So this is the main front end for the banks. So legacy banks would build this in Salesforce or some other system, but the engine platform is completely integrated, so you get all of this. And it's designed to support the digital customer experience.
Yeah, and some people are looking to use it in branches as well, because you've got all the data there. It doesn't look quite like this for everyone, because I'm logged in as a super user that has every operational job. Normally you'd get some screens that are quite honed to what you do.
Yeah.
But this is Lisa's account. This is the account we've been looking at on the phone. This isn't... I hate using videos for things because I've seen far too many marketing videos of shiny software that don't really work. There's 20 million accounts sat under this that are transacting actively full-time every day. It's a big production banking installation. But we can just play around with it and enjoy ourselves as well. So we can see the balances, spaces, control the payment channels and things, down to real details of the card. I think this was Elijah's card that I opened up. It's not the same pretty glossy interface, but actually if the customer has problems, I can change everything from card states to reissuing them, to cancelling them, to changing the user it's allocated to, if you're moving the card around a business account, to those unblocks and the full history there. So everything you need to do when a customer gets in touch is solvable in that first line interface. If the customer has a button, we should have a button to do so as well. It's probably fun to get in touch, actually. It's one of my favourite bits to do with the demo. So something we never thought we'd build is a kind of chat and call interface. When we first launched, we started with one of the many kind of commercial off-the-shelf SaaS contact center platforms. And we used that for years. So it got us a long way, but we've ended up building our own chat and call handling system too, because actually we found having employees in one interface that's purpose-built for what they're doing. It's so much more efficient. We thought it would save us a bit of money, and it would help with resilience and security, is a lot of why we did it, actually. But in reality, it made the operational staff 2.5 times more efficient in handling chats, which is an improvement we'd never have forecast.
Yeah.
Real surprise. And so
the beauty of having it in a single app is it's much less complicated, obviously. You know, a lot of banks are building the user front ends and it's quite complicated. If it's a different platform, different technologies, they'll have to be custom built and integrated. So Starling's developed a single platform that does all of that for you. So it's specifically designed to support digital banking experiences.
So if I go through a typical scenario of getting in touch, a lot of what you can't solve yourself is fraud and financial crime. It's been a bit of a theme today, definitely partly perpetuated by me because I spent so long working on it and find it fascinating. So if I am a customer, there's a transaction on my account I don't recognize, I'm going to get in touch with the bank. That's always what happens. And so in the app, I can click need help with this transaction. And again, because we're running this and we want to keep the cost cheap, a lot of this is dynamic and telling you what's going on. So if it's still pending, we'll tell you that it can't be disputed, it might adjust, it'll be different for hotels, etc. In this case, it's settled, it happened a little while ago. So I can dispute it, either because there's a problem with it or because I don't recognize it. And we know what the transaction's for, so we can guide them through the right kind of steps. And so if I think it's fraud, it tells me what to do, it gets me to capture some data about it, but ultimately what am I going to want to do? I'm going to want to get in touch with the team. And so if I tell the system to chat with us, you're not going to have to watch me type on a phone, it won't be any fun. Then over on this side, I'm logged in as a customer service agent, and he's being presented with the chat, so he's currently working chats in our system. And there's Lisa's chat popping up. But because it's richly integrated, we get all the contextual data you might want. So not just, and forgive my British phone's 4G tethering effort, which is working valiantly as it loads. Not just all the personal details on the right-hand side that I'm definitely blocking, of who she is, what device she's on, which product she has with us, whether we have any notes about her, which might be vulnerability situations, previous victims of crime. But we've got the full history of contact with us, any chats and calls. If you're getting in touch, it's often related to the ticket that's already open, if we haven't yet solved it. But also, because it came from the app, we know exactly where she came from, and so she was looking at a card transaction. I can see at the top that she was looking at a transaction she didn't recognize, she thinks it might be fraudulent, and then we've got the full details of that transaction, the Louis Vuitton transaction that went through by whichever method it is now settled. I think it was, MasterCard chip and PIN that processed through the middle. And so the agent immediately knows who they're dealing with, what the relationship's like, what products they have, whether they've got anything active and complaints going, and why they're getting in touch. And as a result, you're straight into explaining what to do in those kind of fraud things. And so instead, you're just ultimately picking from a series of macros. This is one of those places where generative AI might be lovely eventually. But you can very quickly go through and get that interaction and respond back. And so we've got it all linked up, and we run the contact center in quite a different way. It's probably the other thing that surprises people. They're normally optimized for cost and for individual performance metrics and that kind of thing. Starling is fundamentally a technology company. It's long thought of itself as a technology company that runs a bank, and actually our now chief executive is a career software developer, which is a very radical stage. And so, I've totally lost my train of thought. So yeah, when we're running the contact centers, we're not tracking people by how much work they're doing, how many tickets they're solving each hour, what the different timing metrics are on it. The admin views don't work very well in this demo environment because it's early in the morning in the UK and everyone's asleep. But if I'm monitoring the contact center, it's all about what's happening for the customers, how many people are queued, what's the longest wait time, we can see the queue, why they're there, how long they've been there, how many chats are being served. We make it very, very hard to access individual person performance metrics. It's basically banned. And so they are there. Everything you do is audited. Everything you do is accessible. But we empower them and trust them the way you would trust a software developer. And so you assume everyone is going to do a good job and try. And if they spend 5 minutes longer on a call, it's because actually that customer needed extra support. They're trying to be helpful. And if you give people good tools and trust them to do a good job, they're much happier, much more motivated in their job. They're likely to deliver better service. Yes, we probably could squeeze 5-10% out of the operational cost, but our cost of running is so low anyway because it's self-service. That's not worth it for the compromise on the experience, and arguably the ones that are motivated and happy do more productively anyway. And so we restricted a bunch of things you would normally expect to see, and we're managing very much on trust as if they're doing the right thing, but clearly we can see if they're not.
So the culture of Starling is fundamentally different than a traditional bank, is what you're saying. It's much more, you see yourselves as a technology company.
Yep.
You're led by a software engineer. The CEO is now a software engineer. That's kind of good. I'm a software engineer. I wouldn't mind being CEO of a bank. Anyway, that's cool. And so you brought that sort of technology, sort of software engineering, linked it with the day-to-day operations of the bank, basically.
Yeah. And so gone, okay, how would you do this in a different world? If you care about the outcomes and the experience for customers, what would you do instead? Yeah. And a lot of that is down to how technology businesses function. They're quite effective businesses. They have quite motivated workforces. So let's learn some of those lessons. And it's a hard journey to scale because we've hired, I joined with 20 people, we've now got 3,500 employees. So we've hired a lot of people in 7 years, and they all arrive with preconceptions, different cultural behaviors they're used to, and trying to convince them to work differently and protecting that culture takes a long time. It's something we put a lot of focus into, and some of it we almost have to enforce by making things disappear, saying no to people when they want to access particular bits of data. But if you give them the reasoning and let them see it work, it's there. Yeah.
And do you think this means that you can release products to the market much faster than normal banks? How many releases? How fast do you release products to the market?
Yes. For those who saw me talk this morning, I said that change is not the risk, not changing is the risk in a bank. Yeah. We've really flipped the way we can look at change management. If we go for a day without releasing a component, we're getting concerned because you very quickly lose the ability and lose the inherent knowledge in that team to replace it. Yeah. So as a technology business, we release the whole banking system 30, 40 times a day. I'm not sure, it's probably like 10 in the morning in Britain, so we've probably done 5 or 6 releases already now. They'll be well underway. We just release all day, every day under the running bank, from card authorizers to the financial crime systems. But actually that's very disconnected from releasing products and propositions. It's just software changing the APIs behind the system. But organizationally, yes, we can release products very quickly too. Yeah. And that's where you're not testing the regulatory bounds. We're a regulated bank. We have the same regulations as everyone else, but you need to execute some of those processes quite efficiently and quite in parallel if you want to move at that kind of cadence. So probably the best example is during COVID, Britain went into lockdown for a couple of months, like quite a lot of the world. You could only leave the house to go shopping, and if you were vulnerable, you were told not to leave the house at all and to try and get a neighbour to shop on your behalf. That's all fine, but most people don't keep very much cash at home now, so how do you pay for that shopping? How do you pay for that neighbour? Because what you don't want as a bank is lots of people handing over their cards and their pins to a total stranger at their door, because we're just going to get rampant fraud and theft. Was our main concern. And so we're like, okay, how do we help customers with this one? How can we solve this problem? And UK Finance, our industry body, spent 2 weeks discussing it and came up with some ATM-based plan that didn't really go anywhere. In 2 weeks, we designed, built, and launched a product for this. So we used our Spaces infrastructure and let you order a new card for yourself, effectively in a stranger's name. Well, not in a stranger's name, in the name of what it was for, shopping, that kind of thing. Yeah. With its own card details, with its own PIN, but with a whole bunch of restrictions on it. So it could only be used in person at grocery stores. It didn't work online, didn't work for ATMs, and you could control the budget independently from your main balance. Yeah. And so then you could hand a stranger a card that you knew only had £100 on it, that you knew would only work at a grocery store, and people could go shopping on your behalf. And that was about 2 weeks from starting to think of ideas to us printing tens of thousands of cards a day.
To go live, 2 weeks. Wow, that's impressive.
A big chunk of that is getting the app interface to explain it and getting the apps through the release process. So.
Very, very impressive. And so, I mean, many banks in Thailand are looking how to become agile, how to blend the business and the technologists. Would you say that because you've basically got the business side and the technology side blended together, that's giving you the ability to innovate much faster? Then you've got the underlying infrastructure that enables you to push out into production. Yeah. seamlessly, basically. So
yeah, I think the connection between the bank and the technology company is really valuable because you build lots of things you would never write a change request for or write a specification for. But because our engineers get to sit in the contact center, see what the operation teams are doing, they just have little ideas all the time and we get feedback. Yeah. It's one of the hardest things to change. Everyone who's worked in a contact center knows the technology never gets fixed. And trying to get new joiners to tell us when they find something that isn't working so that we can fix it. It's really, really hard.
So it's a cultural shift for new employees.
Because we can fix it.
Except they don't like the, some of these buttons.
Yeah, they're moving constantly. There's clearly a new tickets screen coming. I have no idea what this is going to do, but there's a version 2 of that screen appearing at the moment, presumably on the result of a bunch of feedback. So it's constantly evolving, but that feedback loop's really valuable. And you also build features you'd never conceive as a technology vendor. There's constant weird things in the real world. An example recently is an Icelandic acquirer, believe it or not, must have done a software release because they authorize normally on Friday. And on Monday, when they came to settle those transactions, they presented them at 100 times their value. They'd messed up the decimal point, I'm guessing. And so we now have a shiny feature to basically reduce the value and undo bulk card transactions from a source, which probably doesn't exist in most core banking systems, but it's the real world. And we had our Christmas Eve ruined by another UK bank a few years ago as well. One of them presented all of its utility bills. It was a huge utility bill processor, and it double charged everyone on Christmas Eve, which was
well, that's worrying.
Great for everyone having Christmas money, but also meant they couldn't rectify it until the 2nd of January. And so we built changes and did releases that day to allow us to back the duplicate payments off the customer's account and then suppress the credits when they came in.
Yeah. Very good.
I can talk all day about a million different things, but it's probably... are there any questions? I'm aware we've spoken for quite a while. I'm happy to answer questions about Starling and the journey and why we took the path we did. And
any questions, anybody? Oh, go ahead, please.
So it's a great presentation. But Jonathan, so my name is Rachel Freeman. I'm from Time. We have digital bank in South Africa and the Philippines. Very similar to Starling, though for emerging markets. But I'm actually going to push back on some of the things you talked about embedded finance, because what we see, and I'd be interested in Sam's view, because also Starling is a licensed bank and started out as a bank. And so the idea of newly named ex-Twitter is similar to, there are lots of institutions that we put into a bucket called banking, how hard can it be?
Yeah, that's true.
And they actually start to learn that it's not so easy. And I think that there are a lot of institutions that actually think, oh, how hard is, and then they realize that being a regulated financial institution, it's a little different than being a social media company. If you're Twitter, you go down for 7 hours, your customers aren't going to lose transactions, revenue potentially, or the ability to eat, right, in our case. So we don't have the luxury of ever going down, and neither does Starling. So I actually don't think that the models that you're talking about are as successful as you think.
Well, I think, okay, let's, what do they say, watch this space. But I think that what that means is probably X won't get a banking license, but what they will do is they'll offer financial services through X. Yeah. And then the risk will be, it'll all be underwritten by other banks, just like what Apple is doing. So that's probably more likely the model than X actually acquiring a banking license. Yeah. So I'd be, everybody understands that a banking license is a big deal. We work with a lot of organisations. I've got now 3 microphones. I'll be in stereo in a minute. We work with a lot of organisations on applying for licenses, so we know the complexity around that. But I think that, that's a fair comment. But I think that on the other hand, X is very ambitious. I think they're going to really push the envelope. So, it could be unpredictable where they're going to go. Whether they go for a banking license, create X bank, whether they piggyback it off Twitter, who knows, I don't know. But I think that at the end of the day, what you will see, though, and what you're already seeing in the market, is the bank is the service provider at the back end through their APIs, and they distribute through these applications. And the only other thing I would say there is that we work with a lot of banks who are looking to leverage those channels. And when you think about it, it's a gift because they can actually distribute their products through social media channels and expand their customer base massively. They can get access to huge customer bases for their products and services. So that's where I think the growth will come from.
Yeah, and by doing that, I think you bypass a lot of the regulatory obligations, because if your Twitter payment thing fails, you can still go into the bank's own app to make the payment. And so there's an alternative option, whereas, as you say, if you or I are down, there's no other option. That money's stuck and people aren't eating until we bring the systems back up. So I would be surprised if most big companies go for licenses, because it has such implications on the way they're managed, on the way they raise money, the way they manage their equity, etc. You even see with Apple and the Apple Card in the US, it's Goldman Sachs sat underneath as the license entity. Apple haven't gone for the license, and they're a huge financial services provider in the US now.
Yeah, so I don't know if, will Musk go through with it? I'm not sure. but he does launch rockets and stuff like that, So who knows, maybe.
Was there ever a craze of banking as a service being the future?
Well, banking as a service...
in Southeast Asia?
Well, embedded finance really is an implementation of banking as a service.
Yeah.
That's what it is at the end of the day. And you're seeing it in other financial services industries like insurance. And some of the insurers we work with are doing 50 million insurance policies per annum through insurance as a service. So they've gone from doing, small numbers to huge numbers of insurance policies. So, that shows you the impact that this channel can have on your business. Very, very large numbers.
It's a difficult topic. Starling had a banking as a service business for a little while, but when you're talking full transaction banking, the AML KYC obligations are so strict, and the implications of getting it wrong. And I know the team at Westpac in Australia quite well as well, and they've actually shut down their banking as a service business at the end of last week, I think, formally. But we both had the same problem, which is the Venn diagram that overlaps people that have a business that is willing and able to pay, and people that fit within the risk appetite of a bank with a retail brand is very, very tiny. And so they all ended up at specialist banks in Europe, specialist banks in the US, and those specialist banks are pretty much all now either being shut down or under regulatory restrictions or regulatory investigations because of the amount of financial crime that ended up taking place through them. So
that you get through open banking.
Yeah,
I mean, and we talked about open banking with the BOT earlier, and that's obviously one of the key risks with open banking is security and...
Yeah, you can't change the KYC barrier, or it
No.
opens the world up to money laundering, and that's quite hard to delegate. But once the sign-up journey's done, can you initiate payments through WhatsApp? That would be much better than paying through most banking apps, and I saw that happening on UPI this morning, the Indian payment infrastructure. It's brilliant. I wish that existed at home.
Any other questions? Did you...
Hi, just two very quick questions. First, I see the Australian dollars number. Do you have a banking subsidiary or license in Australia? Why is it not in sterling? And secondly, with the 24/7 customer support with no chatbots, I think it would be pretty hard to find a lot of staff to do that in Britain. Do you outsource it overseas to other countries?
Yeah. So the Australian bit, the core system is basically currency agnostic. We run live accounts in 27 currencies. So we're only British. We only intend to stay licensed in Britain. But we make test accounts up in all kinds of currencies just to prove that they work. So the Australians in our team like to pretend they're back in Sydney, even though they're not. The contact centre, though, unusually we do run the entire contact centre in the UK. We've chosen quite consciously not to outsource it and not to offshore it. And it's all down to that trust angle. If you meet a contact centre that you don't trust, that can't help you with the problem, doesn't understand the situation or the circumstance, that kills trust as a digital bank. A traditional bank can get away with it to a much greater extent. So we spend more money to run them onshore. But as a result, we deliver better service and we sit right at the top of the customer satisfaction tables. The key is to make sure your total cost of operations per customer per year is low enough. And if you want some good stats on the difference of this, a typical British bank spends £100 to £150 a year, kind of all in on tech and operations per customer relationship they hold. I think Starling's figures £38, £39 a customer a year. So even with that 24/7 British-based human contact centre, we're less than half the cost of a traditional bank to run the accounts.
Okay, very good. Any other questions, comments? I think we might be done.
Yeah. We can talk all day, but
yeah, we can.
I'm aware we're between everyone and home and drinks, so.
Yeah, it's a microphone. Oh no, that's okay. Got to hold it like that. Just by way of there's something dodgy with that. Yeah. Just by way of just final comments, I think that thinking about the BOT's agenda for the next few years around open banking and open data, the business model has lots of opportunities for Thailand and for the community, and the provision of innovative financial services in the marketplace. And I think that there's a lot of players that are innovating in this space. It's creating a very dynamic environment right now, and it's all essentially technology enabled and driven by customer demand. I think that's where the interesting place that we find ourselves. And I'd just like to thank Sam for coming along today. Starling is one of the most successful, again, digital banks in the world. They've built it end-to-end. It's a great example of a digital banking implementation. So thank you, Sam.
Thank you very much. Thank you for having me and coming to listen. It's been great.
Yeah.